Hello and welcome to today's edition of Beyond Reasonable Doubt. My name is George Wong. Beyond Reasonable Doubt is our own little contribution to the Life Insurance Awareness Month, the month of September. And in today's episode, we are going to focus on the history of insurance. The history of insurance, I've compiled together some material for you. It's going to be interesting. I had fun going through it. There's going to be quite some reading, but I guarantee you, bear with me, you'll be glad that you did the reading. At the end of this episode today, probably you would have answered all your questions just knowing the history of insurance. So let's dive straight into it. I break it down into three parts: the good, the bad, and the ugly. So what is the good side? On the good side of insurance, this dates way back to the ancient era of trade by barter when there was no money in operation. So how then did insurance operate? What happened was, if somebody's house got destroyed from any disaster, the neighbors will come together and they commit themselves to rebuilding that house. Imagine that! Isn't that good? This is so cool when I come to think of it. And the insurance that we know today, if you think way back to this period and see where we've come from to where we are today, think about the need. Think about the need and how insurance has evolved today into different kind of insurances. But it was always about the community pulling together. This is really good. So when money came to operation, the first methods of transferring and distributing risk in the monetary economy was practiced by the Chinese and the Babylonian traders way back between the 3rd to the 2nd millennia BC, that's before Christ. And the first known insurance contract that was drafted was in Genoa 1347. Some other challenges that came along the way: traders who trade using ships, a lot of ships would sink. How do you compensate them? During this period, they will reimburse the victims, but then came the issue how much to reimburse. So then they started applying mathematical formulas how to determine the rate of compensation. And then ships will sink more often in some seasons. The seas are very stormy some seasons and not so stormy in some other seasons. So we've come a long way to where we are today. This was the good side of the insurance. And now let's look at the bad side. On the bad side of history when it comes to insurance, the property insurance we now know today can be traced back to the Great Fire of London, where it took its origin. That was way back in 1666, where about 13,000 houses were completely burnt, evaporated. And I live in Canada. This is very fresh in our memory. This summer has been a record-breaking summer with a lot of wildfires in Canada. And the most recent one is from British Columbia. I wouldn't imagine how many thousand houses are burned in British Columbia and across North America. But the point I want to make is, take your mind back into 1666 and having 13,000 houses burned. That would have been compared to like the world was almost coming to an end. It's not just a disaster. So that was the magnitude of it. So because of the effect of this disaster, the development of insurance moved from a matter of convenience to a matter of urgency. I would say emergency. And the mayor of the community opened the first insurance office as a way to address this kind of disaster going forward. Let's follow along to the next part, the ugly side of insurance. On the ugly side of history, I like to introduce you the concept or this system of fire insurance marks. What is a fire insurance mark? It's a system where the insurance companies that would insure property in a given community, they will go around putting marks on the building that has been insured, leaving those that have not been insured. The real ugly scenario was where you would have different fire brigades going around in the same community. They ignore buildings that are on fire and try to look only for buildings that have their own marks. Even if it had a mark from another company, they would tend to ignore. So this became a problem, and how could they solve this? The municipality had to come together and bring all the insurance companies such that their funds will be pooled together and rather given to the municipality, not to the brigades. So the municipality will now equip the brigade so they can go around remedy the situation in case in the situation of an incident. However, that did not fully solve the problem because they will still go around looking for the fire insurance marks. Any building that was not insured, they will still tend to ignore that, even if it was on fire. So a really ugly scenario. Further to the history of life insurance or insurance, in the United States, the first sale of a life insurance in the US began in the late 1760s. The Presbyterian Synods in Philadelphia and New York founded a corporation for relief of poor and distressed widows and children of Presbyterian ministers in 1759. There was still a challenge of how to distribute to victims. So they started developing software and mathematical and statistical tools that will be put in place for what we now know, developing the modern life insurance that we know today. As a summary to the history of life insurance, this kind of gives us a purpose. Why insurance in the first place? In a very short way, we can say insurance is just a risk management. That is the purpose of insurance, risk management. So I would like to read this as a summary to this history of life insurance. The history of insurance traces the development of the modern business of insurance against risk, especially regarding cargo, property, death, automobile accidents, and medical treatment. The insurance industry helps to eliminate risk, as when fire insurance providers demand the implementation of safe practices and the installation of hydrants. So the hydrants we know today are practices that were implemented as a way of this risk management. So in a whole nutshell, managing this risk is a way of spreading the risk from one individual to a larger community, and this provides an important source of a long-term finance for both the public and the private sector. Talking about risk management as an insurance strategy, what is it that is a risk to you that you would want to spread to the larger community, into a bigger pool, so that it can help relieve that financial burden from you in the event of any eventuality? So today, we know we can protect our assets, we can protect business, we can protect illness, we can protect our life, you can protect, you name it. There are athletes, particularly in the sports, who even protect just parts of their body. And we will not go into those details for now. Maybe in the days ahead, we're going to go into different types of insurance. Talking about the risk management as an insurance. And now I want to thank you for watching along up to this point. I hope it brought some new revelations to you. I hope it brought some clarity. I hope it changed your perspective some way, in a better way. One thing I want to let stick into your mind: insurance has evolved over the years through challenges and has been modified, fine-tuned into what it is today. It's a risk management strategy. We cannot eliminate the risk, but we can only manage it. I would call it today's insurance is actually a risk transfer. And the question I still put to you: what is it that is a risk to you that you want to transfer? Put in the comments. Like if you like what you followed today, click on the like button. You can share to some people that you want them to benefit from this information. And stay tuned for the next episode. We'll be talking about the purpose of insurance and the concept. We can visit the different types of insurance as the days come ahead. So next episode, purpose of insurance and the concept of insurance. Thank you for watching and stay tuned.